Hey folks, Dan Frio here with your closing bell for June 4th, 2025. So it was a good day if you're waiting for mortgage rates to come down, so they started finally coming down. What happened? Well, here's what started the day. We had the beginning of the day, we had ADP payroll, or ADP coming out with the payroll numbers. Well, it came in at 37,000. They were expecting this to come in about 111,000. So it was about a third of what they were expected. So that's what caused some concerns on Wall Street and the bond market. And then the Fed's beige book came out as well. And that's also not painting a very good picture of the economy right now. So, and then when you add that to Treasury yields tumbling, well, it was a good news for home buyers and homeowners, might not be a good news for corporations in the stock market. So that's what we're going to talk about in today's video. I will be also talking and giving you two areas, or a map where it's showing two areas that are kind of really dropping in values, and they're condensed into certain areas that, yeah, you probably know where they are. So let's get over to today's news. So my name is Dan Frio. I do this report actually twice a day to inform you guys what's going on with these things over here. If you're in the market to buy or refinance your home, hope you stay at the end till the end of this video so you can explain, or I can explain to you what I do for a living. And we have a slogan here: one application, one credit pool. We're going to shop your loan over 30 different lenders, and I'll explain that at the end as well. So let's get over to today's news. We had ADP payroll coming in with the numbers, and they were expecting them to come in about 111,000, and that would have caused the markets just to keep going, doing what they're doing, and just worrying about the Trump trade and the big, beautiful bill. When this number came in at 37,000, when it's expected at 111,000, that started showing some concerns, and I'm going to show you the bond market's reaction to that here in a second. And then the Fed actually releases their beige book, and this kind of details of what they expect, in the economy and the jobs market and so forth. And that didn't provide us very good news as well. So then what happened is you start seeing Treasury yields starting to tumble, and that's good news when it comes to these things over here. So let's get over to the bond market. Here is what happened in the bond market today. So this is, if you need to understand and how this works, is we focus in on this because it's a mortgage bond. It's an MBS. So this bond right here that we're looking at is the yield on this thing is going to be the biggest component of your mortgage rate. Okay, so what you have to understand is this is giving us the price of this bond. So as the price goes up, rates come down. So same thing the other way. If the price goes down, rates go up. So here's what happened today. Oh, here's what happened in the last 2 days. Well, here's what happened in the last 5 days. So we were down here, and now we're all the way back up to here. So this is going to help people that are looking to buy because it's bringing down rates. Rates were at 7.1 just last week. Now there's 6.8. So it's a nice little move down. But also don't fight this trend because the trend right now is up and away. So let's look at the 2-day trend. So I'm not going to really fight this curve until we see or have some information that would cause this to go the opposite way. So that's what I'm looking right now. I'm still pushing out rate locks. I'm not at risk questing or asking you to lock in your rate. That's my opinion. And don't let me sway you on what you do. But this is what I'm advising my clients right now. You go over to the stock market. The equities were kind of just a mixed bag. You have the Dow Jones down 90. We have the NASDAQ up 61. Russell's nothing. VIX is flatline. So nothing there. Oil markets, they're down. That's good. So that's good on the inflation front. Let's check crypto. What's going on with that? Oh, that's down 1,200. So that's not good there. So let's go over first to the economic calendar that we have, the news that we have coming up in the next couple days, because this is going to fill in the rest of the gap that the Federal Reserve monitors. So they monitored inflation. That's the PCE. That came in last week, and it was good. They monitor the GDP. Well, Atlanta Fed came out recently, and the second quarter is going to be coming out soon. They're predicting the GDP to ratchet all the way up to like 4%. I don't know if it's going to go that high, but at least it's a positive number. So that should throw out basically the stagflation data. So now it's going to come down to jobs. Jobs. So what do we have coming in tomorrow? We have the government numbers on initial jobless claims coming in. Then we have all the numbers that really the markets will be concerned about on Friday. We have average hour earnings. How much people are really earning? Is it more or less than where it was? Non-farm payrolls, and then the true unemployment rate. And they're expected this to stay steady at 4.2. I'm going to be on that realm as well. So I don't think any of this data is going to hurt our chances of lower rates. I think as long as this data comes in at point, maybe hopefully a little bit worse, that rates might come down a little bit from there. So lastly, but I do want to also address foreclosures because a report just came out on those I want to address with you. But the next thing is two maps that show where the housing market is struggling. Now, I just got this posted today, so let me get my head out of the way and just let's see where the markets are struggling. So green is good, yellow is normal, and the orange is slow. Well, where's the slow markets? Well, Florida, Texas, California. Even in the mid, I don't get this part here, but okay, let's give it a thumbs up. Normal, down through here. In green, well, my area right through here. Parts of California, I talked to people there, here, and also up in this area here. I'm not going to say it's starting to slow a little bit, but this was crazy up in this area through here. So if you're looking anywhere here, this might give you a little bit of an idea where home prices are going the rest of the country. Let's just say they're normal. All right, so let's get over to this. This is one last piece of the puzzle I want to show you guys. This is going to talk about foreclosures, and all you need to know is right here. This was posted today. All right. The caption here is we follow this all the time. So if you watch this, I always go to calculated risk newsletters, and we will not see a surge in foreclosures that would significantly impact home prices as followed the housing bubble from previously. Here's the data, and they go through all the data with you, and it's in detail. They go down through here, a whole bunch of other things, the REO, how much inventory is there, and the data is not there, folks. So if you want to check this out, just go to Calculated Risk. They post newsletters every day. You'll get a lot of information from this, but I post this information for you in most cases, so hopefully I can provide you kind of a one-stop shop for all this stuff. So last but not least, let's get over now and check out, based on any of this slow data or the data from the Fed that we're getting and the data that the Fed will be responding to, what's the expectations that the Federal Reserve might cut rates at the next meeting? Because some are saying, well, maybe this will push that agenda ahead. So let's go over to the FedWatch tool, scroll down in 13 days. Federal Reserve is going to come out and do something. What are they going to do? They're going to do nothing at this meeting. Now, the next meeting, depending on these things, might be changing the odds. And I think that's what's happening right through here. So the Fed's uncertainty and the Fed's position on this, if they see a deterioration in the jobs market, they're most likely going to cut. And they also have President Trump on their butt as well in regards to this. They got a little bit of pressure there, but this might be a scapegoat for them to come in and finally say, okay, if this jobs report number comes in a little low, might give them enough confidence to go in and say, okay, we're going to cut rates. And then hopefully at that point, you're going to see the markets rally. And I also think the bond vigilantes are going to be out of the question this time. So I think we're going to see a nice little reprieve if the unemployment numbers come in a little bit unfavorable. Let me put it this way. If the number comes in weaker than expected, hopefully that'll push the Federal Reserve to at least start coming in and saying, okay, we got some concerns now. And that alone will help the markets push in the direction that we're all hoping they go, and that's for lower mortgage rates. So that's my report for today, folks. So a little bit about me, just so if you want to know, if you're out there looking to buy or refinance, I'd love to be able to help you. I've been doing this for over 35 years. I work at a federal bank. So what that means for you is no matter where in the country you live, as well as Puerto Rico, I can help you. So here's the benefits that we have as well. If you're out there and you're saying, okay, Dan, I need the products and the rates and everything else, what do you do? Well, we have a slogan, one application, one credit pool. We're going to shop your loan over 30 different lenders. How do we do that? Well, I had a conversation with my boss this morning, and we currently have 32 lenders that we're working with. And why? You might ask why. The reason why is for you. You're out there, you're looking, you're like, okay, Dan, you have the products I have. How about your rates? Well, this is where we come into play. We're going to scan your loan over up to 33 different lenders. Us, one of them. So us and 33 other lenders is where I'm going to pull my rates from. So if you can beat what I can find you on 33 different lenders, God bless you. But if you would like to work with us, we'd love to entertain that. And we'd love to work with you. So if you're out there looking to buy that first house, use our experience and knowledge and our pool of investors and programs to help you out. Same thing if you're looking to refinance. So go to therateupdate.com. We've added a lot of tools to this website. We just added our phone number up here. It was missing. If you want to ask me, we're going to have a tab right here where you can ask me a question. You can even upload. Let's say, for example, you get you locked in your rate and you're like, Dan, is this a good rate? Can you beat it with all those lenders you have? I'm going to have the ability for you to upload all that data right into here. So I'll review it. I'll give you a call or send you a video right back to let you know what exactly I can do for you. You can hit the apply now button, really simple process, and you'll be in tune. You'll be basically a part of this process the whole time. Or you can request an appointment. You can do that right through here, and also with scheduling a consultation. So that's our report for today. Hope you enjoyed it. Hope you check out our websites. And I hope if you're out there looking to buy or refinance, I hope you reach out to us. So thanks for watching. God bless. Have a fantastic evening. And I hope to see you back here tomorrow to see how this mess ends or starts yet another day. Thanks for watching, folks. Take care. Bye-bye.